Thinking about putting your hard-earned cash into a single stock? It's a tempting idea, especially when you hear stories of people striking it rich overnight. But before you jump in, let's take a closer look at what single stock investing really means for your money and your peace of mind. Let's dig into why that can feel like riding a roller coaster, with big thrills but some real dangers too. The highs can be exhilarating, but the lows, well, they can be stomach-churning. Alright, let's talk about the upside first. When you invest in a single stock, you're betting on one company's success. If you choose wisely, the rewards can be life-changing. If you pick a winner, the rewards can be massive. Your investment could grow far faster than the overall market, and you might see returns that most index funds can only dream of. Imagine you bought shares of Microsoft back in the 1980s, when it was just a quirky software company. Back then, few people could have predicted just how big it would become. Fast forward to today, and Microsoft's become a trillion-dollar powerhouse. It's a global leader in technology, and its stock price reflects decades of innovation and growth. Early investors saw their money multiply hundreds of times over. It's the dream, right? Stories like these are what makes single stock investing so appealing. Who wouldn't want to be part of the next big thing? But here's the flip side. For every Microsoft, there are countless companies that never make it big, or worse, crash and burn. Single stock investing means putting all your eggs in one basket. If that basket drops, you could lose everything you've put in. If that company stumbles, your investment could vanish. Take Enron, for example. It was once considered a sure bet, a darling of Wall Street. This was a Wall Street superstar in the 90s. Investors poured in, confident that the company's rapid growth would continue forever. Then, the truth came out. Massive accounting fraud. The company's financial statements were a house of cards, and when it all collapsed, so did the stock price. The stock crashed from over $90 to absolutely nothing. Investors who had put their faith and their savings into Enron lost it all. Boom, fortune to zero just like that. It's a harsh reminder that no company, no matter how successful it seems, is immune to risk. That's the risk. With single stocks, there's no safety net. You're walking a financial tightrope, and one misstep can mean disaster. No diversification means your entire investment rides on every up and down of just one company. If that company faces a scandal, a bad earnings report, or even just a shift in the market, your portfolio could take a major hit. It can be heart-pounding, sure, but it's also nerve-wracking. The emotional roller coaster of watching your investment swing wildly can be tough to handle, even for seasoned investors. So here's a tip, if you're thinking about trying your luck. Treat single stock investing more like a calculated risk than a guaranteed win. It's a bit like gambling, and you need to be prepared for both outcomes. Only invest what you're truly willing to lose. Think of it as your fun money, not your life savings, not your emergency fund, but an amount you can afford to see go to zero without derailing your financial future. And don't just buy into hype. Dive deep, do your homework, and understand the company inside and out. Read annual reports, follow industry news, and make sure you know what you're getting into before you buy. Consider learning from experts, attending webinars, or even talking to a financial advisor before making big moves. The more you know, the better your chances of making a smart pick. Long-term success in investing isn't luck, it's smart decision-making. It's about patience, research, and sometimes, knowing when to walk away. Remember, smart investing starts with smart decisions. Don't let FOMO or flashy headlines guide your choices. Let knowledge and strategy lead the way. If you found this helpful, hit subscribe for more tips on how to grow your money the smart way. We're here to help you navigate the ups and downs of investing with confidence. Thanks for watching, and I'll catch you in the next one. Until then, invest wisely and stay curious.